Hello investors. What a volatile month it has been, and thanks to coronavirus, we've had the markets which were excellent for the first 3 weeks of the month. The portfolio was really coasting and we thought we were going to have another superlative month. But in the last week of the month, the US really cracked 10%, and the whole coronavirus fear has really spread in the equity markets. So I guess that is really what's led to almost a 10% fall in the US markets. Our markets also fell more than 6% for the month of Feb. But the good part is that we have been again able to outperform, and we fell under 3% for most portfolios for the month of Feb. As I said, our objective is, yes, to make more when the markets are rising, but we also like it when the markets fall, we fall less. So when we fall in a difficult time like this, when things were unraveling all across the board, if you find that our portfolio has fallen less than even half of what the index has, I feel it's a good month. It's definitely not very satisfying because we always like to make money every month, but this is the reality of the market, and keeping drawdowns low or keeping losses low is also imperative in the long-term journey. So on that note, we need to really think about the months ahead, because what we are experiencing in this current sell-off is a situation which has really not been mapped by the markets earlier. Most of the regular stuffs, which is about economics, fundamentals, companies, numbers, is something that keeps happening quarter on quarter, month on month. But these kind of pandemic issues that are there, which we are experiencing, is once in a decade or once in a generation. So we went down and did some work as to what exactly has happened whenever we've had these flu and virus scares in the past. We had something called the Ebola virus, then we had SARS, then we had swine flu. And when we went out and studied market behavior in these times, it was always that we did see a market that corrected. There was fear. The markets corrected about 10-12%. However, 3 to 6 months later, whenever these viruses do have a point of maximum acceleration and then there is a decline, markets are much higher. So essentially these are nothing but blips that happen, and we've seen in the three viruses or the three pandemics that really came up earlier, we've had markets that have had a short-term volatility, but 3 to 6 months later the markets have been much higher. We are going through that volatility right now. I know the thought in your mind is that, well, this is not like the three viruses I spoke about earlier. The answer is yes. It is much more global in nature, and it's spreading out faster, and definitely the panic is much more. So when we go back in history and see that when was the last time that the world had something like this, we go back to something called the Spanish flu that happened between 1918 and 1920. So that's like way back at the start of the 1900s. And the extent of this was so large that it affected almost 50 crore people worldwide, and there were 5 crore deaths. So this is something which is massive. Now, the fact was that even at that stage, the market behavior we saw was very similar. Yes, we did see a correction of 10-12%. However, in this Spanish flu, which lasted over 2 years, you will find that after a few months, the markets went on to make new highs or gather new momentum. The difference is that this time we are in a bit of a global world. People move a lot more than they did in 1980. So the transmission is more global in nature. That is the negative. But the positive is that science and medicine has also evolved. And hopefully that could be another factor to really reduce this kind of spread of the virus. We don't know the end game. Nobody knows, and our strength is not really knowing that science of it, but it's about markets. So we don't know how it will end. Interestingly, nobody knows how it ends, whether seasonal changes will reduce the onslaught, or is it that we'll find some medical cures. As I said, we do not know. But we are braced for short-term volatility. And towards that, we have raised 8 to 10%. We had actually raised cash much earlier, and we are sitting on 8 to 10% cash. So this, I think, will help us to cushion the fall. And more importantly is that as and when we feel that the markets are recovering, we will get a chance to invest in some fresh stocks. We have eliminated two stocks last month, which we were not too happy with the kind of numbers and the trends that were visible to us. But this has helped us because the markets have fallen, so it reduces a cash element in the portfolios high. And as and when markets turn, I think we would be in the right spaces to reinvest this money in better and faster stocks. So on that, as I said, we leave you fingers crossed. We don't know how this whole virus flu thing is going to pan out, but I am not so pessimistic. As I told you or shared with you earlier, that we have seen that these panics do come in from time to time. However, we are not playing for a month or 2 months, but a good few months later, money that will be put into work at this stage, I think will do much better. Fortunately, as I said, we are sitting on some cash, and I think we will put it to play at the right time. As usual, we are watching the markets like a hawk. Times are difficult, but as I like to say, that tough times don't last, but tough people do. And hopefully we will stand out in that category of people. Thank you, and fingers crossed.